Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news of some groundbreaking protections for some very vulnerable borrowers. But first, passenger growth in the world's airlines was very strong in August, up 7.2% year on year. In the Asia-Pacific region, international passenger traffic grew 8.6%. Interesting, this data shows that Australian domestic air travel actually fell. The OECD reported higher economic growth in the June quarter for almost all its members, and the highest in at least 3 years of about 2.5%. The US is clamping down on some payday lenders with some tough new regulations that may shrink the industry dramatically. That is because these lenders rely on fees, especially from defaulters, as part of their business model. Under the new rules, lenders will be allowed to make a single loan of up to $500 with few restrictions, but only to borrowers with no other outstanding payday loans. For larger and more frequent loans, lenders will have to follow a complex set of underwriting rules intended to ensure that customers have the means to repay what they borrow. This industry has grown in New Zealand as well. We count 18 active brands in the local market. Their MO here is the same as the US, targeting vulnerable people. By the way, President Trump is actively seeking ways to roll back these protections, but his chances are not high. There was data out for the American trade deficit overnight for August, and while the monthly numbers came in pretty much on expectations, it is interesting to see the difference in the 8-month 2017 track compared with the same period a year earlier, mainly because the new US administration said they would improve the situation of persistent trade deficits. But the reverse is happening. These deficits in goods and services traded are 8.8% higher this year than in 2016, which was lower than 2015. They've gone backwards on this measure. The Canadians also reported their trade deficit, and that is widening too. Lower exports to the US are the reason here. And staying in Canada, planned major oil and gas pipelines from their oil fields to major markets are getting cancelled. This comes after persistent opposition in communities along the routes and from some indigenous groups. In Europe, German companies operating in the UK must prepare for the worst-case scenario of a very hard exit from the EU, says the head of the powerful German business lobby group. He warned those not making provisions for the event that the UK quits the bloc without a new trade agreement would be naive. Meanwhile, there seems to be a rush of American and other international financial institutions to rent large amounts of space in Frankfurt. And the ECB said it discussed options for scaling back their QE program at their September policy meeting, but worried that the strengthening euro might upset the region's economy. Lower for longer here, it seems. In Australia, they're starting to think that the surprise stalling of their retail market in August may be a turning point. Spending in cafes and restaurants and on takeaway food plunged 1.3% in August to be only a little higher than it was in the previous August, and the lower per person after taking into account population growth. Apparently, Aussies were dieting in August, one analyst said. The lucky country hasn't had a recession in over 25 years, but the next one seems to be getting closer. In New York, US Treasury 10-year yield is up 2 basis points to 2.35%. The price of crude oil is up a little today, now at $70.75 a barrel, while the Brent benchmark is now just under $76.75. This gain is because the OPEC output restraint agreement looks like it will be extended. The price of gold is basically unchanged today, still at $1,273 an ounce. And the Kiwi dollar is slightly lower at 71.2 US cents, but that is actually now a 4-month low. On the cross rates, we're now at 91.3 Aussie cents, 60.8 euro cents, and the TWI is at 74.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.